All right, good evening, guys. Kenneth Tortoise Capital Nightly Strategy Podcast for Saturday, August 16th, 2022. I want to start with jump right into the reports first. So we are still in bearish normal, with real weakness on the 2 and 10 day, and even the 30 and 90 have now dipped under the 50-yard line there. Risk is risk on, but neutral now that it's under the 1.0. ETF2 is at 20% still. Monthly market health check. The range compression of the last couple weeks is getting ready to set up some kind of either a retracement or a give back to the previous level. See what that is. To me, a stop around 440 is crucial. On the 9-day, real strong support here, and by which I mean that if that breaks, it fills in that square pretty quick. And then 410 is the real break point, right around Z2. That's the one that's painful. Long-term fair value there at 400 on the 9-day. This little retracement here, the declining PSAR after such a long and glorious run. I mean, that's 3 months of not being able to turn it around. And this 3-month period looks significantly different than this large piece. Yeah. K2 to the downside for sure. Which makes me think that 400 or 420 at least, and then 400 are still in play. On the weekly, you can see how sharp that reversal was. This was the return to normality. Oops, not so fast. Let's get this. Already down, testing the bottom of the dragon at 435. And that's coming. I mean, it's already sitting right on the lower end of the river at Z1 and fair value. So if this breaks to the downside, then what I do is I take this upside move and just clone that. And that's how far it can move to the downside, from 480 to 420. That's a $60 move. So a break there could get us to 380. Yeah. The 3-day has shown steady decay and a very weak close. This little move up and then retracement in 3 days is just, par for the course. The rejection of the high, couldn't even make a new high, couldn't even get back to the Bollinger Band mean and the top of the dragon. So it's got to get above 450 for this to be a serious move. And this is the last little piece of cushion right there at 430. Yeah, so the daily is sitting right here at 437 and some change, right at the 10-day low, 9% off the swing high. RL10 sharply down. PSAR and the RL30 both sharply down. Dragon sharply down. The only thing favorable out of any of this is are these two. The Bollinger Band mean is slightly to the upside, meaning that this could hold here and give us a nice rebound to the upside. And the short term, Hull 3 period is slightly up. So there is the fact that it hasn't failed, that it didn't fail over the long weekend any further, is some faint comfort. But again, if that breaks, there's nothing that stops it until it gets down here to, what's it, around 425. BMR portfolios. There was no joy anywhere except marginally in mid caps. But all other things being equal, Australia and the commodities were the least painful. Diamonds held on as good as anything in the U.S. did. Real estate, U.S. real estate has to be considered too. But boy, Treasury's just getting slaughtered here. And then the three speculatives in the U.S. just did not have good weeks at all. And tech was especially poor. Energy and inflation still there. There's no good long-term solution to the Russian changing of the world order. Materials responding to inflation. There's your inflation trade. Agriculture and silver for defense. Inside the Dow, the industrials here, Caterpillar and DuPont trying to make a move. Naturally, Chevron's going to do well. Only two indexes on a buy signal, Asia less Japan and Latin America. That's why we're at 20% allocated, 80% cash. Boy, has that been a good indicator for protection. And the whole U.S. underwater now. Yeah, the winners continue to win, and there's no real sign of the next leadership. Like, we don't see any green and white, so there's like no new strength. It's just the old school just pulling away from everybody else. Metals, oil, materials, energy. Brazil. Looking at the ATR percentage here for excellent traders, regional banks, gold miners and bio, oil and gas, China, semis, and energy. Shifting back to the daily. Caterpillar, ExxonMobil, Chevron, Coke, and Walmart, the staples in energy. Tesla, Microsoft, Cisco, Intel on the max pains in tech. Lots of auto framers to choose from. 5DD and JP Morgan, and a 4 on the RSI 2. Lots of auto framers to choose from in the ETFs, as always. Brazil on the squeeze and with some good yellow zone trading stats. This is all from Thursday, of course. So we've seen this once. There's our top 5 in the Dow and the ETFs, dominated by energy, materials. All right, let's get to the traders. So I owed this one to Tim a while back. I thought I had given this one to him Thursday night, but I did not. Where did I put that? All right, let's see what we got here. All right, so he's got 2.3 today. And what was really nice about this was his write-up, in which he talked about how grinding this thing was, but that he had maintained his zero state. And then when he got the moves, he got them when it became a directional trading kind of a day. So he did get what was available here. That's a nice break, getting short just before the crossing of the VWAP. Nice 1-2 exit. Quick hit. I think this reversal might have been a little slow, but we could live with that. He got paid a little bit here and here. This was just a quick loss in the middle of that river. And I think he just decided that based on how choppy this was, question, should I have entered long after the dominant hammer? I don't know what a dominant hammer is, so I would say no. If you don't have a pattern, then you don't have a pattern. A dominant hammer is not a thing to me. I like the fact that you stood aside during the chop. There's no directionality in that. You want to see breakouts from the Z3 on when it's compressed that much. So I like that one. I like the quick exit. I like this one. I'd like to have gotten paid in here somewhere around here instead of here. Now you're getting paid. And then your patience is rewarded with the big moves when they occur, which is why you're getting work here. So this one, which got you started with, this one made your day. That looks exactly like all of these other ones. They all look the same leaving the river, leaving the station, I should say. So that's good, good work inside there. All right, we'll shift to Chi Wing Chong. Yeah, the 60-40 portfolio is getting smoked beyond belief. This was the great departure. Finance and energy showing the early love, and then finance just crapped out to become the worst, and is still lagging the other guys here. Materials leading the way, tech and finance leading the way down, and can't even catch the S&P. So this one in energy, watch for that to start rising. That would be the least surprising move of all. That's a 2 sigma move from here to there. And if that holds support, that should be a nice move in energy coming up. And now the XLP versus XLY business, everything rising, and XLY greater than XLP, so that, you know, growth was on, leading the way. When everything rolled over, this is where the weakness started, and XLP the defensive plays began to lead the way, still are. And XLP defense is still leading the way, even as SPY rolls over. So what we're seeing is XLE and P and B, the inflation plays and the defensive plays, beginning to lead the way as this rolls over. So that's part of the seasonality assessment of what's going on. All right, let's look at some of Glenn's frames. So JP Morgan, we saw, was a 5DD, terminating in a nice little breakout recovery or a big collapsing fail at a natural support. This is actually below the support level. So if this fails, that's just a continuation and a collapsing dragon. This is barely enough to get our attention. But if it does work, it should get through this gap down up to 129. And if it shows strength, the second position, if it starts to fail, cut it and capture that. And then the short is just obvious. And this is at an extreme sell-off in both weekly and daily. So what we want is abnormal conditions. And this can be in terms of location and in terms of volatility. And so there's three places the location can be abnormal and show possibilities. So if we take any time frame and we say the upper limit of that is 100 and the bottom limit is 0 and the midpoint is 50, here's where the abnormal conditions for big moves are. The first one is if it's at 100 or between 90 and 100 and it's had a great run up, right? What that means is that it's well postured for a continuation breakout to the upside or a retracement back, that it has moved up and now is rejecting. So you're going to get the move back to the baseline. So that's why being in the top 10% of the NDX is good. So between 90 and 100, it's had really extreme performance compared to the last look back period of the index, right? By the same token, things that are in the bottom 10% of that look back period, we'll call that 0 to 10. This one also has the possibility for an abnormally large move. That could be a rebound back to the midpoint, or it could be a continuation of whatever caused this thing to be horrible, and it's a new breakdown into new territory, collapsing and the bears winning. The final one for me is if it's between 45 and 55, with one special condition. I want to see a range compression, because now if it is hesitating right in the middle of the range, then it's got an equally likely strong move up or down, just to get back to the extremes of the look back period. That would be the least surprising move, would be a test of those. So to me, location has about three different ways, three different trade locations where it's abnormal enough to suggest the possibility of an unusually large directional move. And then volatility, if we think about our histogram, the average volatility plus or minus 1, and we would call this space between Z minus 1 and Z plus 1. In the histogram, I would just consider that to be normal, normal volatility, nothing special, nothing going on there. Abnormally volatile, it's already making big moves. So I love that. So if you were to combine one of these special conditions and a volatile market, man, that's double plus good. The other one that I really like is abnormally quiet. On the lower end of the spectrum here, right? That when things are quiet, too quiet, you combine that with a posture at one of these extreme locations plus quiet, and you have the opportunity for a great big move, double plus good. Maybe the best classic example that would be something like a super pinch or a Z3 pinch, where something had moved up and then settled down and then gets locked right in the middle. If I were to draw that as the look back period, I say, there's 0 and there's 100. Here it is stuck right in the middle, and it's in a super pinch, and everything is extremely quiet inside here. That's the kind of explosive move to the upside or an explosive move to the downside that's very tradable. So that would be a combination of like that in the middle of the location index plus abnormally quiet. On the other hand, you could imagine how something would be in the green in location and very volatile. So if something had made a really strong move up, and this has now come into a tiny little MMRB up in here, you could say, well, I could get another strong move to the upside, or maybe that thing retraces halfway down the stack and is going to come here. So the combination of an extremely abnormally good performance in the look back period, like a new 10-day high or 30-day high or whatever that may be, plus some volatility that got it there, that's nice. You just don't know which direction. And then by the same token, if that thing had come to the bottom and has now made a tiny little MMRB retracement, well, this is going to be just our signal for the SSC. And if that fails, we're into the collapsing dragon and down we go. Or the thing works, the SSC works, and we get kata twos on the way up. So this whole idea of looking for abnormality feels crucial to me. So as I now evaluate Glenn's charts, what I'm looking for is the abnormality. What is the abnormality that stands out to me that implies the potential for a great big move? So I really think about potential energy when I'm doing that. Potential energy. And I know that what we want to do is when it starts moving, that turns into kinetic energy. Which means that work is being done. And so potential energy can come from location, like at the top of a hill. and it rests here. All it takes is a nudge downward and things roll downhill. So finding this little peak right here that has rolled over, when I start looking at these higher highs, I'm sorry, a high, a lower high, a lower high, there's a bunch of potential energy sitting in that little location simply because it's at the top of this little shelf. So all it takes to get an abnormal move is a trigger. In this case, we see a statistical trigger. There's a PSAR flip and a crossing of the dragon, and then a PSAR cross. It's already crossing the Bollinger Band mean, and then down this thing goes, and it goes right to the location that you would expect, which is a retest of the previous low. That's the least surprising move that you could get. You know how big that move is. It's the size of that move. And you know what your MMRB is. It's either the top of the dragon or the top of the RL10. And you can see that that's a favorable reward to risk. So you'll take that one all day. That is standard work for an abnormal condition. The abnormal condition is that it's got a lot of potential energy because of location. It could be location down in here, that all of this falling price action that did not fail further is now stored up in here. So now you can get potential energy because of a coiled spring effect in which range compression, much like a coiled spring will store energy from force, when that thing releases, you get big moves. You just don't know which direction it's going to go. In the same way that when a frog on a lily pad has got his legs underneath him poised and ready to go, he's just waiting for the trigger. You don't know where he's going to jump. You know how far he's going to jump, pretty far. That's the idea behind the frog. So as we're thinking about standard work and abnormal conditions, we want to have standard rules that allow us to simply and standardly frame a trade that can be favorable to us when conditions are abnormal. And we prefer to trade in abnormal conditions because that's where large moves occur. Here's something that is abnormally narrow. That's abnormal. The range compression there is small. It's also got a lot of potential energy stored in it because of its location at the top of that gravity well. So if that trigger does hit, bam, and then a second leg, bam, and now it's storing energy down here at the bottom, ready to break out in either direction. So when I look at Glenn's, Greg, talking to Greg earlier today, Greg. When I look at Glenn's charts, I reliably find abnormal conditions that he's highlighting, both on trade location at the bottom end of a massive sell-off on the weekly from 175 to 125. I mean, who are the fat cats that own all the banks? Yeah, the banks own the banks. And they're down 30% in JP Morgan on a weekly basis. And they can't get this thing turned around despite efforts to do so. And now it's at the bottom of this pressure well, or this gravity well. Is it going to do this or that? I don't know. But once it moves out of this tiny little wrist box, there is a huge payoff in both directions. And you can see that very clearly on his hourly or his 30-minute with an MMRB of 50 cents. So Glenn's frames are outstanding at finding fractal critical states on weeklies and dailies and hourlies, or in this case, 30 minutes, the tactical. I mean, the fractal nature is the weekly and the daily, and then the tactical chart is using simply allows you to see with a little more fidelity the execution ecosystem. ADP, automatic data processing. So here's one that's conversely near the top of that weekly range, but also abnormally narrow. So that's what we like. There's been a wonderful SSC, COTA 2, great run up right to where you would expect it to go, up PSAR flip. So now there's enough of a retracement to really get our attention. So with a tiny little wrist box, there's a nice move back up to the test. Or there's a breakdown all the way to the next level. And he's noted places where he would add a second and a third position so that if this thing does go into free fall and comes back to hold support around 215, he's going to get a payoff from a nice position. It's already free and clear below this consolidation. This was the area where you would have expected it to go to here if it was gonna, but it didn't. It failed. So that's leg one. And now we're expecting leg two down to 215. Nice frame. Caterpillar, the industrial. So let's see where his abnormal is. So abnormally high, anyone? At the very top of the weekly compared to the bottom. I mean, that's the top 1%, really. So if this does break out, it's free and clear up to the top here, 245, maybe the top of the dragon. We'll say 240. So that's plus 13 to here and plus 5 plus 18 to there. And he's talking about a less than $1 MMRB. So that's 13 to 1, 18 to 1. And this is as nice a little COTA 2 as you could ask for. And it's already made that move and has now cleared this one and is testing that one. So if this breaks north of 230, there's nothing in here at all that's going to stop it until it gets up into here. So if, that's certainly one to pile on. But if it fails, you could see how that comes back to 220 and on a tight little wrist box, you get $7 to the downside, $1 a risk. So there's either 13 or 20 on the way up and 7 on the way down for $1 worth of risk. That's the kind of a lottery ticket you want. There's an options trade there that's pretty nice too on a straddle. All of Glenn's materials have option straddles baked into the cake. Treasuries just getting murdered. At the very bottom of the weekly stack. Oh, is this the rebound or the collapse of Western civilization? I don't know, but that's not much. It's a 50-cent or 60-cent frog box at 25-cent MMRB. That's going to trade like a maniac next week. That's going to trade like a growth stock. Occidental Petroleum. Top of the stack, top of the stack. Look at this nice little range compression, zero state, ready to break either way. 50-cent box, off you go. This thing trades itself. ExxonMobil. Look at that narrow little range. Holy mackerel. Is this a Ken H? Feels like it. Yep. He's mad that there was the gap in his favor was the gap against him. But he got in after it cleared. So he's still in good shape. That didn't cost you any money. Nice. God, this is nice work. Quick recovery. We might have wanted this one here, but he got this one. So that's still in good shape. Coca-Cola is going to work. Unfortunate. You know, he's playing for a tight risk. Natural gas, the only possible short-term solution to Russia. And that's a 20% move right there. Wow. Finally. Yeah. How many Kata 2s and SSCs were we going to look at before we got it? All of them. We'll look at all of them. It's driving the Greens crazy. Do they want to? They hate nukes. They hate coal. They hate natural gas. They hate civilization at some point. I need to get over that and become serious. Become serious persons. Target. Feels like it has left the station and is trying to grind north. That's, next stop 250, then 260. That feels good. That was resolving to the upside. Yeah. This tension of higher lows has now resolved to the upside and it's clear. He's given it just enough room for the breakdown, but this should go. Metals and mining. Nothing but love here. Nice work. Off it goes. And you're on the side of the angels. It just broke here, which is where his PSAR break entry was. And he had a bunch of trades inside here. Looking good. Caterpillar, same one that Glenn had. That's my new favorite. +5. I like it. So Nike is in that weird trying to get a Kata 2 on the weekly. You can see it a little more clearly on the daily. He holds his nose and buys it, I think. Yeah, I mean, that's worthwhile. You've given it enough room. You've given it $2 to get to 139. So that's a 2-to-1. And there's obviously some belief in it. It's got to clear all this, but if it does get above that, that was all sell off. That's not resistance until it gets to here. I don't really treat it as resistance until I see it resisting. That's evidence of resistance. This is just evidence of free fall here. So that's not going to stop this thing from rising. This would. Tex. This is the bearish triple. And we saw Tech really suffering last week. So this is a reflection of that. So he's going to try to play this next. If that's leg one, then this is leg two with a tight little risk. Off it goes. If it starts going this way, then you have the, you know, your leverage Tech on the long side. Like the TQs, for example. Pfizer. The healthcare had been on a really nice run, pulled back, and is now still postured for a, the pause that refreshes. Second leg up, holding here. So that's a higher low if that holds. And then you would think that that could get to 57. So that's a +3 on a dollar risk, 3-1. And yeah, you want to see it get north of this before you add that second position at the round number of 60. Yeah, that was failure to fail further, and one little effort up, held nicely. So yeah, getting long here is great. Like it. And our last one for today, Boeing. Boy, this is just the uncertainty of the world. Are we going to war, not going to war, is making this thing jump around like a maniac. But I just got to believe that as an industrial company, that's got to be holding support here. So this is a chance to get at least to 195. So it's +10 on $3 risk, +10. It gives you 3-1. Yeah, I think that's playable. So here are some numbers on this next project that I'm working on with some of the folks from a THARP workshop. We got a little team of folks who were interested in doing some intern work and some heavy lifting. And the bottom line is, we got about 10 or 13 years of live trading in Raleigh and also in Kansas City. Ken H. can attest to the pain and suffering of that. When you add up all of those trades, they were all anywhere from 3, usually 4, sometimes 5 days of live trading. And each day of live trading was preceded with some prep, some planning and preparation, then executing the live trades, and then assessing it, and then going right back into a plan, prepare, and assess. So we would get 1, 2, 3, 4, 5 days of plan, prepare, execute, assess. And then with lessons to reinforce along the way, lessons about self, systems, and markets. All of that's interesting, but what's interesting is 1,500 trades. The best trade we had was an 11. We had a -2 in there on a swing trade. That was a gap. So I'm still suffering on that one. The win rates were about 60%, loss rates 25%, scratches about 15%, and the payoff was about 2.5 to 1. So this is a 60 to 25. That's about 2.5 to 1 on the win rate. And the payoff gives you about a 5.25 to 1 advantage over a 13-year period. And that's what the cumulative R looks like. And that's what the production, this was just a reflection of some improvements in our technique where this raised a significant, going from 0.4 to 0.5 is pretty good because that's considering all of the previous ones too. It was getting to an average. So that's what the curve looked like. Now, what's interesting to me, but also not surprising, is it's been kind of the stable approach. Some great traders along the way, out trade me on my own systems. And so each of these folks, who've been participants in the live trading, including guys on my my professional board of directors there. I consider these guys all kind of black belts in our strategies. And I have been impatiently pushing them to develop niche systems, because what I end up doing is trying to teach everybody everything I know. And, so that has produced a foundations course, which really was, I took a look at the things that you needed for the core, long-term, the swing, and the day. And I said, what were the common pieces and parts of those? And I tried to drop it into foundations so that no matter which way you wanted to go, you would have some strong foundations upon which to build. And then during the COVID in the last 3 years, we've sort of blended core, swing, and day into a hybrid that covers all of those time frames and the spaces in between. So you get this kind of elaborate ecosystem, which is supported by all of these elements here, which I think of as the trader's mind. Skill sets for problem solving and operational excellence that make you better at the business-like performance that you need over years. But in my view, each of these people in this stack are what I think of as niche experts. What they've done successfully is taken this pile and refined their craft during live trading to create a niche for the particular style of trading that they want to do. Like Bill Scheit is a swing trader using PSAR flips, and he's picked symbols and markets that really suit him. And he really can be found combining the BMR, blended monthly rebalancing, plus some swing trading rules and the space in between. So if anything, he's kind of the core swing hybrid trader so that he can run his business and take care of his family. And he doesn't really monkey around much with the day trading. Eric Morrison has taken my stuff and developed something like a hybrid swing and day trade system, weekdays only, in the Forex, along with Worth. And they're putting that into robot language and scripts. So they found their niche. Danny's a man for all seasons, and he has found ways basically he's mostly a swing trader. And what he does is use the mechanical and strategy patterns of the swing and frames them with options and then executes with TC2000. And he's also produced the TC2000 bundle. My brother Bill is combining his engineering and nursing intuitive nature to really optimize the pattern-based sniper trading intraday with a very robust stress management and risk management sensibility, bulletproof mind, being able to focus on what matters. Glenn, you're seeing, is I think of him as a swing trader one day at a time, in which he's framing these swing trades and he's looking to get paid, and then using money management to keep a piece. So if that swing trade keeps going, he's getting those pieces one day at a time, as long as they're in a critical state. So that's a niche. Luke is niching on the 5-minute Aussie, and you see what he's doing. His numbers are better than my numbers. Kim Anderson, swing and day and bear markets and sideways, applying the principles of ruthless risk management to be very strict on managing her losses and getting paid. Ken H, and the big bear trader that he is now, he's now starting to pick up options. He took Danny's options course and he's already paid for that options course with his first trade in Wheaton. And you see what he does with his, he does like a combination of the fractal weekly and dailies, and then leads to either the 30-minute or the 60-minute, where he's getting turbo on those and a core on the swing. And now if he's adding options to that, oh my goodness, he's going to own the universe. So my point would be that each of these folks have taken my generic courses and developed their own particular expertise, develop those with the people in the tribe. They're on the team. But each one of them has built a niche So I'm going to have them turn that into a mini niche course, and then have them teach that, so that will force them to learn their system even better. And then I may be able to persuade them to coach, or I may just develop coaches anyway to help coach the courses that these guys create. So my brother's out in California right now filming the pieces of the sniper trading course, and Morrison and Worth, they got the Forex live and ongoing. Danny's got the options course live and ongoing. Of course, I got the core swing and day and whatnot. And I'm persuading these guys to get these things going. So that's one way ahead, is keeping these things kind of as they are, but now certifying or developing these folks. See, they learned their craft during the research weekends, when they brought their systems in, peer reviewed, and got their brains strained. And then we live traded those systems in the live trading week that would follow the weekend. So that combination of research weekend and live trading week turned out to be really important developmental work for all of these folks. And it really helped me refine these pieces and to generate lessons of general interest in all of these. So here's the blinding flash of the obvious. We've got all of those 1,500 trades. 100% of them were recorded. And all of the mini lessons that went into it were recorded. And so I'm getting the some interns, and we're going to take those and we are going to deconstruct them. And for each one of these workshops, we're going to get the timestamps. We're going to see which lessons in there are really appropriate. We're going to tag them for planning, preparing, executing, and assessing. We're going to pull out all of the supporting lessons that may have been on money management or framing or whatever. There will be lessons about systems, self, and markets, and there may even be some themes. And so once we take each of these workshops and decompress them into the little chunks, we may be able to recombine those using themes into some other efficient home study courses. It may simply be good enough to create the Cornell note sheets and the timelines and the itemized listing of all of these videos in a nice little index, so that you can we'll treat this as one meta workshop with 1,500 trades and a couple hundred hours of work, but allow you to use the index to just go to the lesson you want instead of trying to combine them. Maybe we just go with it. So the first piece of work that we got to do first is go through and simply itemize everything on the timeline and figure out which ones are A, B, and C category of things. I've edited them once already, so only the good stuff is in there, but A would be must have, timeless gold, silver, pretty good stuff. C, not bad, but not burning urgent. So as we go through each and every one of the lessons and video snippets of these, and we categorize it by A, B, and C, and then figure out where it belongs, we'll at least start by getting a timeline. Now, back in the day, not everybody could come to those. So I was selling the home study version of each one of these for anywhere from $2,000 to $3,000. But I'm now thinking that if we got 10 years or so worth of these things and one giant project, kind of the archives, I think of that as the research group. And the research group has 13 years of all these guys and their research papers and presentations and all the peer-reviewed comments. And I think those 13 years of all their papers and presentations and all those lessons learned, plus all of the archive trades, that's the research group. And so I'm going to offer the research group to the world for good people. I think I'm going to make that an application. I'm going to put that out there for $5,000. It'll never be cheaper than that. But you have access to all of the research papers and the peer review and all of what will be the indexed lessons, plus all the future ones, because we're going to keep doing this. So I think it's a one-time fee to support research and create skin in the game. That's my plan. I've just decided. I was working with my brother and all of you guys that are on this list. Your grandfather, you've already paid the price in sweat and tears. Once we get all that work done and itemized, the price of that research group is going to go up. But until we get all that done, I'm going to leave it at 5. Now, as I'm talking with my brother and the niche folks, my brother helped me understand this, and what the folks that he's talking to, we're kind of in this category. What has come out of this is a very clear dividing line between professionals and end users. And that really became clear to me again this week. So engineers make cars. People use cars and they drive to work and whatever. And we license them with driver's ed so that we can all be safe together. So you don't have to know how the car works at the mechanical engineering level. An engineer does who made the car. Hey, all these guys are engineers of their systems. And they know all these things, which is why their systems are good. And the research weekend and the peer review is why it's bulletproof. That's what an engineering process is like. By the same token, engineers build bridges. All you need to do is cross the bridge for the purpose of getting to the other side. And a bridge is sort of like a power tool. What I should have done is made this one a power tool, like a chainsaw. As we said this morning, you don't just give a chainsaw to someone to use. I mean, you can do it twice and then they can't take it anymore. But just because we make things doesn't mean that you just let people willy-nilly, that like in a power, like you don't need a license to cross a bridge, but you need a driver's license to cross a bridge to get in the car to drive it. But power tools, like you don't give a guy a chainsaw. So how we teach and how we certify people on that's what those niche courses are going to be about. So I just wanted to share that with you, that I'm moving out in the direction of getting all this stuff integrated and prepared for delivery, because I have a real sense of time is of the essence to get this stuff done. And so, I'm identifying things that I want my brother to talk to end users about, because he's designing courses for end users to use. And there are some things that I want anybody that uses any of our courses to absolutely know. And I'm trying to just isolate that down to the minimum mission essential to include what we know about psychology. So that's kind of the direction that we're heading in. I'm going to support these guys with as much or as little as they want to do in developing their own niche courses. Frankly, they don't need to teach those courses. All they need to do is just trade their own systems and they're good to go. But a number of folks in that list are already designing courses, and we're going to get this stuff done. So we're going to use this kind of approach to really concentrate on what is it that I got to teach people to do and make sure they know it so they don't harm themselves without having to drag them through all this mud. This is always going to be here because this is what I'm interested in. And people that want to generate niche courses, I think, need that kind of training to be able to do this, or to manage money professionally. But, some guys just need a car to go get groceries. And so we're going to accommodate that. So more to follow. That's everything I wanted to cover for tonight. Good to see you guys. Thanks for your awesome support all the time. Chi Wing and Ken H. You make it easy and fun for me. And I hear the girls just came back, and I'm hoping they brought ice cream. That would be awesome. All right. That's everything I got for you. Take good care, and we shall see you tomorrow.